All right, Alibaba was down 6% after reporting earnings from Thursday. So it was trading at a stock price of $91 and now down to $83. I'm heavily invested in Alibaba. I've placed around 36 or $37,000 USD into the company, and due to the stock price plummeting, over the last sort of 2 years, I've seen that drop my profits into the negative by over $13,000 USD. So quite a bit for me. I've currently got 282 shares at an average price of $131. So obviously the stock price is trading at $83 now, but let's see what Yahoo Finance had to say about this.
To shareholders, the shares are down about 2%. We had been waiting for details of what these spinoffs were going to look like. But at the same time, even though the company beat, domestic commerce was down by 3%. Its cloud division revenue was down by 2%. So that seems to be one of the things that's putting pressure on the shares this morning. Even though the headline numbers look good, the domestic commerce business is huge, right? I mean, if you're looking at this as akin to the Amazon of China, and the commerce business isn't doing well, and the cloud business is seeing declines, then that, is not great news. But it is interesting to hear about all the various separations that Alibaba's doing as well.
Yeah, 6 different businesses. They had essentially kind of earmarked here, and for the cloud unit, I think investors have a lot of focus on this specifically because of the margins that Amazon Web Services sees from their cloud business, or that Microsoft sees from its own. All that said, for Amazon, or for Alibaba rather, what some of their challenge has been is.
All right, so you can see straight after that, you can tell after reporting earnings, investors are straight away just worried about the cloud business decreasing by 2%, and they're not really thinking about the revenues and the increase in cash flow that Alibaba has actually created. So we're going to have a look at the earnings report and break down all the important information. But starting with a couple of the key sort of business highlights. Now the first one highlighted here is about that cloud intelligence group, and they approved a spin-off via like a stock dividend to all the shareholders, and then that'll then become a independent company by itself through an IPO, and they're exploring an IPO for Chinyao Smart Logistics Group and an execution of an IPO for Free Shippo as well. But here are a couple of the highlights here. So the revenue was an increase of 2% year over year, with the net income being an increase of 38% year over year. Looking down at the earnings per share, it's an increase of 35% year over year. So straight away you can see how much they've been increasing all their other sort of factors, but yet you listen to any sort of, cloud revenue going negative by 2% year over year, and the stock price is now down 6%. So it's not really a true representation of how the company is performing just because one segment within it is going negative. Moving down to the business strategic updates. So China commerce, right? So the online goods from Taobao declined in the single digits year over year. But however, they're focusing on increasing media content that strengthens consumer engagement. They're being more price effective and time sensitive to the customer needs. With the international commerce sector, so companies like Lazada, AliExpress, Trendyol and Daraz platforms grew 15% year over year. In Southeast Asia, Lazada recorded double-digit growth year over year. Local consumer services. All right, so the number of average daily users of AMAP reached a new record high of 150 million, and the domestic hotel booking value grew over 70% there. All right, Chinyao, so revenue from Chinyao grew 15% year over year, and 72% of that total revenue was generated from external customers, so that the international sector. Right, so now we're moving to the cloud. So this takes into consideration Alibaba Cloud and DingTalk. So a decline of 3% year over year, and the reason for that is it's reflected delays in delivery of hybrid cloud projects given the COVID-19 resurgence in January. So that was the biggest contributing factor. So now that that's done and dusted, I believe the next earnings report will be a lot better, but we'll just have to wait out for that one. Digital media and entertainment. So revenue grew 13% year over year. Benefiting from high quality original content such as Who Is He, The Blood of Youth. So I personally haven't watched any of any of these two TV series, but that was the biggest generation of revenue for that company there. Right, another good news for shareholders here. So this is detailing the share repurchase program. So they repurchased 21 million shares for an approximately $1.9 billion under the share repurchase program. But that's not it. So they've started repurchasing 1.9 billion, and yet down here they've still got 19.4 billion remaining. Right, so that's only really good for investors there. Now this is talking about the restructure. Most people have heard of it before, but essentially Alibaba is breaking down into 6 major business groups, and they're going to be independent, have their own CEOs and board of directors, etc. One key factor with the spin-off here, so everybody will become their own independent companies with the exception of Taobao and Tmall Group, which will remain wholly owned by Alibaba Group. Talking more about the Cloud Intelligence Group, so they're going to give off a stock dividend to their shareholders, and then that'll then become a independent company. They intend to structure the spin-off in the most tax efficient way to the shareholders, and they're looking to complete this spin-off within the next 12 months. So the IPO for Chanel will be within the next 12 to 18 months, and the IPO for Free Shippo will be within the next 6 to 12 months. So here's the the earnings report here. So the revenue again, so up 2%, the EBITDA up 37%, the net income up 38%, and the earnings per share up 35%. Although just because you've had that negative 2% in the cloud sector, therefore investors don't like that, and the stock price just decreases 6% from there. So therefore, yet again, as you can see, just from a little bit of bad news because they didn't meet an expectation with one segment within their business group, the stock price has now fallen yet again, but yet it's not really reflective of the company's performance. So with that stock price declining in value, you could use this as a good opportunity to buy more stock at a cheaper price. If you were to look at the revenue numbers and the net income and the earnings per share, you'll be able to see that nice linear progression, as well as the free cash flow within the company. So therefore, stock is extremely undervalued at the moment, and I guarantee you're only going to have to wait like an extra 6 months to a year before the stock price just rallies in value by huge amounts. But I guess we'll have to wait and see. So that concludes the video. Give us a like, give us a subscribe if you did like the content, and I'll catch you next time.